Today is 29th. Okay. See, these are the substantive procedures. Okay. In the examination, they will ask you to write the substantive procedures regarding the assertions. Okay, regarding the assertions. In the previous case, we have done test assertions in terms of controls and test of controls. Okay, controls and test of controls. Here, assertions with respect to substantive procedure. If you go through the question papers, definitely they will come across the difference between test of control. Okay, there is a difference between test of control and substantive procedures. Both are different. Okay, both are different. Substantive procedures. Same thing will happen. Okay, in the examination they will assume it is going to be for 20 marks. Okay, they will give one assertion. They will ask existence. They will ask rights and obligations. They will ask valuation. Okay, they will ask presentation. Any one they will ask. Okay, and I have divided this under different chapters. Okay, 10A, B, C, D, like this. Fine. Now in this section we will cover which one? Non-current assets. Okay, we will cover non-current assets. What are the substantive? See, if you purchase, what will happen? What are the documents we have to verify? Okay, as an auditor, what are the documents we have to verification? That's all is there. Nothing more, nothing less. Okay, what are the documents? Which are in terms. Pardon?
Someone is waiting in the lobby.
Huh?
Someone is waiting in the lobby.
Assalamu alaikum.
Walaikum salam, sir. How are you?
Fine, alhamdulillah. Okay, we are covered. Today we are going to start again just for your NV1. Today we are going to start substantive procedures. Okay, we have 10 A, B, C, D, E. Okay, this is a very guaranteed question. Okay, of 20 marks. 20 marks they will divide. How much they will divide? I'm just giving an example. Okay, there will be one question A, B, C, D. Okay, A, B, C, D. One question they say substantive procedures, and they will divide it like this. Like, is it total will be how much? 20 marks. Fine. We will cover this, and it will be there. Okay, without substantive procedures, we cannot expect a question paper as such. Okay, we will cover the substantive procedures with various different. Cash will be there, payables will be there, payroll will be there. Okay, likewise, what we have done, I told you just now, we have done test of controls with respect to assertions. Is that with respect to assertions in chapter 8? Okay, in chapter 8. Here we are doing again substantive procedures in terms of assertions only. Don't get confused. There is a lot of scope. Students will get confused. Is that writing test of controls to substantive procedures? Substantive control objectives are different. Text of controls are different. Substantive means you are substantiating, you are detailing. Okay, you are detailing, you are verifying from various different aspects. Okay, various different aspects. Very focused. Chapter 10. Okay, chapter 10, all sub chapters. Okay, 10 A, B, C, D, E. Now what you are doing? Tangible non-current assets. What is the evidence? Definitely, when we say yes, we have the asset, what is the evidence? We have to show the evidence. Okay, evidence in respect to non-current assets. Fine, you have to show the evidence. If there is non-current assets, you will calculate depreciation also. Okay, depreciation, how much you are calculating depreciation, what is the prior year depreciation, current year depreciation. Definitely we will see, because there is a possibility that there will be some errors will be there, and in some cases there will be frauds will also be there. is a depreciation. Now, when you are selling off the asset, okay, when you are selling off the asset, definitely they will have profits and losses. How you are making the valuation? Is it? What is the procedures of? We are not going in detail. We are just working out what are the procedures for valuation as such. Apart from that, is that apart from that, explain the what are the audit objectives and audit procedures in relation to the closing balance. Is it in relation to the closing balance? What we have closing balance? In relation to the closing balance, what we have to do? Okay, I'm not saying it's a simple one, but it is very. Now the same thing is there. Non-current assets. We will see the evidence. Okay, very clearly. Evidence, multiple sources, sufficient and appropriate. Okay. Now you are very clear about the language. Is that this is sufficient and appropriate? Is it relevant and reliable? Okay, relevant, sufficient means again for your convenience. I'm saying it is a relevant and it is going to be a reliable. Okay, it is going to be relevant and it is. Now you will talk about depreciation. You are talking about gains and losses, and if there is any impairments. Okay, if there is any loss in value. Okay, how it has to, because as a matter of fact, non-current assets is, I told you, two things are there in the statement of financial position. Is that the major chunk, major share will be non-current assets. In the income statement, is that apart from sales, the major chunk is what? The major cost, okay, in terms of cost is inventory. So these two things are going to be heavily focused. Focused means there is a possibility and probability. There is no guarantee. There is a possibility of and probability of getting the examination question as such. Now coming back to this. Now we are almost come to this stage. We have done test of controls and we are coming to the restricted. We never do restricted. Okay, they will never mention that it is a full substantive procedure, or they will say restricted. This is only for our understanding. But as a matter of fact, when you are doing it, they only mention substantive procedure. Don't get confused that what is full and what is restricted. Okay, that is for our understanding. Fine. Now we are almost coming to the fag end of the subject. Only two things are being there. Is that reporting to the management, overall review of the financial statements. Now when you do the thing, what is the audit objectives? What for what we are doing this? Is that what is the specific objectives? When you are talking about non-current assets, the objective financial statement assertions. Is that financial statement assertion? Existence and occurrence. The non-current assets should exist and it should occur. What are the things? Existence means additions represent anything you have added, you acquired in the year, and disposal represents sold or scrapped in the year. Additions represents assets acquired in the year. Okay, divide the sentence. Okay, divide the sentence. Fine. And is that additions represents assets acquired in the year, and disposal represents assets sold or scrapped in the year. Definition is very clear. This is the first point. Okay, second point, completeness. All are, if there are any additions or disposals occurred in the year, have been recorded or not. That all the additions, all the disposals should be accounted, recorded, accounted as per the event it happened. Balance represents, what is the balance? Balances represents assets in the use at the year end, means what we are doing in the as a closing balance. Is it right? At the year end. That is the we have to be complete in terms of additions, complete in terms of any disposals, okay, complete in terms of the closing balance. Second one, okay. Third one, rights and obligations, whether you own it or not, that's very important, is it right? The entity has the right of assets purchase, and those records, see whatever we are showing, is it, I told you assets can be owned, is it right? Assets can be owned, assets can be leased, assets can be rented. But if we are going to show in the balance sheet, we have to make sure that whether it has been owned or not. The entity has the right, ownership right. How you will verify ownership right? You will see on whose name the invoice is there. Is it right? In the name of the firm or not? You will see the source document. Is it? They have the rights of the to the asset. Sometimes what happen, leases will be also be there. Is it right? Lease will also be there. Is it? Yeah, when you have the lease, right to use the asset, is right? Right of use of asset. Fine. You have to be clearly differentiate. But here, when you are doing the things, I will mention that also very clear. We are talking about the things specifically the owned, what we have owned. Fine. This is the third one. Now, what we are doing? The fourth one, accuracy, classification, value. Non-current assets are correctly stated at cost less depreciation, accumulated depreciation. Is that when we are talking in terms of closing balance? Okay, when we are, I'm very, very slow here. When you are talking in terms of closing balance, is that we use the word, if you have not done in financial reporting, we use the word carrying amount. Is it carrying amount? Carrying amount is nothing but cost of the asset, cost less accumulated depreciation. Any additions or disposals, again correctly recorded. Simple one, you are doing anything, you have to record it. Okay. Fourth one, assertion. Fifth one, assertions related to presentation and disclosure. What it says, occurrence and rights and obligation, completeness, classification, understandability. Is that disclosures, disclosure, whatever you are doing in the notes to the accounts, okay? Whatever we are mentioning in the notes to the accounts. Is that disclosure relating to what is the cost, what we have added, what we have disposed of, what are the depreciation policies, straight line or diminishing balance, what is the useful life. Is that these are all characteristics of the asset. Is that and assets held under finance, anything we have bought it from on loan, is it right? Anything we have bought it on loan, anything on lease are adequate and in accordance with accounting standards. This we have to disclose it. What we have taken it on rent, what we have taken it on lease, what we have taken it on loan, is it right? What we have taken it on a loan, what we have owned it. We have to make, and apart from that, make it very clearly. You have to be very specific about the depreciation policies, because if you have prepared financial statements, depreciation, they will mention specifically depreciation. Okay, useful life. There's a characteristics of the asset. What is the simple definition of simple formula of depreciation? Simple formula of depreciation is cost minus residual value. Is it cost minus residual value divided by life of the asset? If which you are using for what? If you are using for a straight line method. Written down value method, you will have the percentage, okay, on the written down value. Likewise, when you are making assertions, disclosures should be related to cost, additions and disposals. Okay, you have to, what are the cost of the asset, additions and disposal during the year, depreciation policies, useful life, whether it has been under finance or lease, finance, lease are adequate in accordance with the accounting. This much is the thing. Now you have a simple, you just imagine you have the assets, you have 2-3 cars, 2-3 buildings. Okay, you will account for those buildings separately. Okay, each and everything, we have sold it, we have bought it, what is the depreciation, everything we are doing. Okay, now if you take a rough view, what we are doing, we are focusing on the existence, anything additions, anything disposals. Okay, anything addition, anything disposal. Keep these five. Is that very simple? If you are talking about the assets, it is the existence, completeness, rights of the obligations, and accuracy and its presentation. Fine. Now, coming the following slide,
So
they
we
say.
have to memorize the assertions.
Pardon?
Is there a need to memorize the assertions?
They will ask you a question in terms of existence. Okay, they will ask you in terms of rights and obligation. They mention very specifically non-current assets, rights and obligations, substantive procedures. Is it rights and obligations? These all are automatically, by the time you will revise the subject before examination, automatically these things will be there, and there is no memorization also. Is right? You are revising so much, this will automatically will be reflected. We will have very clear cut classification. Is that what is the audit risk, what is the internal audit, what is the test of controls, what is the substantive procedures, what is the review, everything will be there with when you are making a revision as. So I will not say memorize it, okay, because they will ask very clearly in terms of accuracy, classification and valuation. Fine. Now then you have to think about what is the accuracy, classification and valuation. Don't see what they say very clearly. Do not confuse with test of controls. Don't get confused with test of control. These they are reminding us all through that time. Okay. Again, when you are doing it, what is the test of control? We will have a control and we will say that the control is effective or not. That's all. Okay. Effective or not. Whereas substantive procedures is a detailed procedures. Fine. Now you see the thing. They will ask in the question substantive procedures of non-current assets with reference to completeness. Complete. What is the completeness we have done in the previous first thing? All additions and disposals occurred in the year have been recorded or not. Is that all have been recorded or not? Now what you will do, first thing is that what the first thing you will do, if we are talking about completeness, see I told you non-current asset register, is that register will be there. Okay. Obtain a summary of tangible NCA showing gross book value, depreciation and net book value, and reconcile. Always the first thing is you have to reconcile with the opening balances, opening positions. Is that what you have to take the summary? Okay, you will say when you are taking the summary, what is the gross value? Is that what is the gross value? What is the depreciation? And what is the accumulated depreciation? And what is the net book value? We have taken this summary. We will go to what? We will go to the opening balance. As their opening balance and what is ever the summary we have done is accurate or not, is complete or not. The first thing always in most of the cases it is the opening sequence is really important. Now what second stage what we are doing? Compare non-current assets in the ledger with non-current asset register. See, the moment you will buy a asset, you will create a non-current asset register. Once you have done register, then you will pass. The moment you are receiving an asset, you will note down in a separate non-current asset register. Then subsequently we are going to post in the ledger. What you are doing, see the things. Here also we are working where we are working backwards. Okay, the net book value to the opening balance. Here also what they are saying, we are taking the ledger and we are seeing whether it is there in the non-current asset register. Whatever in the ledger we are showing completeness. Why we are going from backwards? Because this is the value we are going to arrive at. Okay, this is the closing value. With the closing value we have to go back. Okay, we have to go back with the closing value. Now we'll take the ledger balance and we'll go to the non-current asset register. I am putting the arrows. Okay, I am putting the arrows for your convenience, for your understanding. Okay, now if there is any differences, then you have to obtain explanation from that. For a sample of assets physically exist, they are recorded in the non-current asset register. Is that you have the physical assets? Is that you have the physical assets? Physical assets, again, what you are doing, you are comparing with non-current asset register. Whether these physical assets are there, you are saying these are the cars, are they? Yes, as per the physically. Okay, first we are talking with respect to ledger. Second, we are talking about the physical assets, whether it is exist or not. If a non-current asset register is not kept, if sometimes it happens, okay, sometimes it happens, then obtain a schedule of original cost and present depreciated value of non-current asset. If there is non-current asset is not the register is not, then you ask them a schedule. Ask them the schedule. Schedule is nothing but a working paper. Pay on the paper which they have written, on the book they have written. Is right? And in that again they will say what is the cost of the asset, what is the depreciation. Means what is the thing completeness means whether the closing balances has been correctly arrived at or not. Okay. Reconcile is the last one. All the time reconcile the schedule with of non-current assets with the ledger. Reconciliation will be there. Okay. Reconciliation will be. Now I will make it. It will take little bit time for us to understand. The first one is we have to take the summary of the opening. Anything opening balances. We have to compare with opening balances. Next we have to compare with the ledger. Ledger to non-current assets. Then you have to say physical assets to non-current assets. Multiple verifications. Okay. Then you have to physical to non-current. Then if it is register is not there, then you have to schedule to the schedule of the assets. Obtain a schedule of the assets showing what is the cost and depreciated value. And last but not the least, reconciliation of non-current assets with the ledger. Is it non-current assets with the ledger? This is what in terms of completeness.
Sir,
Yes.
what do you mean by opening position? Is it the same gross value or what?
What is meant by opening?
Opening position. Is it the gross value?
Opening balance. Opening position.
The depreciation?
Is it net book value reassigned with the open? See what there are two things are there. Is it right? Opening position, initial cost. Is that initial cost? Is that one is you have purchased it. See this right? See the thing. Now I will yes good. You have purchased it. Is it right? You have purchased it on 1/1/2022. Okay? You have purchased on. You will have depreciation for 22. Okay? Then you will have depreciation for 2023. Okay? Then you will have a net book value. Is it? You have a net book value. Now, what you are doing when you say accumulated depreciation, the accumulated depreciation is nothing but the depreciation calculated in the first year and the depreciation calculated in the second year. Is it? Now what happens? You are making sure that yes, the depreciation. I am making more clear. I am making more clear. The depreciation value is 100, 100, 1000. Okay. Depreciation is 150 first year. Second year the depreciation is 150. Okay. Now what happens? You are going to say that at the end of first year 850. At the end of second year it comes to how much? 700. Now you will compare, okay, you will reconcile. You will reconcile 700 plus 150, 850, 850 plus 150, 1000. You will say that yes, it has been complete. Is that you have calculated the depreciation for the year 1, you have calculated the depreciation for year 2. To know the things that it has been, depreciation has been calculated in both the years. Opening position. Opening position is the initial cost, or opening position will be otherwise in terms of opening balance of the year.
But it's not the gross value, right?
It's not the
It's not the gross value, right?
gross value.
Yeah.
Automatically it reflects gross value only, na? Gross, see how gross book value is 1000. Gross book value is 1000. Accumulated, see, gross book value is 1000. Okay, I will write here. Gross book value is how much? Gross book value is 1000. Okay, accumulated depreciation is 150 plus 150. Net book value is how much? 700. Net book value is how much? 700. Automatically. Is it complete or not? Is it complete or not? Means 1000 is the gross book value. Depreciation 150, 150. If you add the accumulated depreciation and net book value, is that if you add accumulated depreciation and net book value, we are going back to what? We are going back to the gross value. We are making a complete, whether we have done the things as per accordingly or not.
Okay, the 700 in 2024 will be the opening position. The net book value of 700 in 2023. In 2024 will be the opening position. Because
Opening position for the year. Okay, how you are see opening position for the year. If you are talking about the net book value, it is opening position for the year. But if you are talking about the gross book value, the opening position will be 1000.
Yeah, to remain okay. It's the same for the gross value.
Okay. It depends on how we are understanding. Okay, how we are understanding. The reason is the purpose is we should make sure that it has been done. Every other calculation has taken into consideration.
Okay, regarding the third point, obtaining a schedule showing original cost. What about the invoices? It's better to inspect invoices instead of obtaining a schedule showing the original cost. This will provide full confirmation verification, right?
For a sample of asset, they are recorded. The third point, now. Fourth point.
Story.
1, 2, 3. Fourth point.
Yeah.
What I say? If the non-adjust is not kept, obtain a schedule showing the original cost and present depreciated value of non-current asset. What is the, see, when it is not there, I said what is the non-current asset? Non-current asset is the first place where we are recording the asset. The moment asset will come, specification, quantity, is it a specification, date of purchase, specification. It is not an account, it is only a register. That is the first source of document. If you don't have that source, is it what we'll do? We'll upload schedule. Schedule is nothing but the same thing, okay? Schedule is nothing but the same thing, register only. Register will be very structured form. Schedule will be a unstructured form. What is the alternative we have to do? Definitely they have recorded somewhere. They have recorded somewhere. Without recording, they will not take the entry of the asset. If you don't have the register, then ask what is the schedule. Is that what is the original cost? How much you have calculated depreciation? Is it present?
But the invoice will provide full confirmation instead of being the schedule, right?
Pardon?
I mean the invoices will provide more confirmation instead of obtaining non-current asset.
Invoices will go in the next stage. Invoices we are going for the next stage. We are talking about complete. We are not verification. We are not talking about rights and obligations. We are not talking about rights and obligations. We are not talking about the existence. Okay, we are not talking. We are only talking about the completeness. What is, whether it is complete or not. Completeness is different, rights and obligations are different. Occurrence is there. If you talk about occurrence, when you have purchased, when it has been happened, then in that case, what are the relevant documents you have to refer? Here, completeness, when you are saying, we are not talking anywhere, we are talking about the depreciation, we are talking about the whether we have any differences. We are talking only about the existence, completeness, whether it is exist or not. We are what we are doing, we are comparing with all the time non-current asset register. Completeness means we have done the calculations as per the rules. That's all. Closing balances are done with all the completeness or not. Yes, tell me please.
That's it.
Fine. Now, you are talking about existence, is it? Now, when you are talking about existence, is it? What you are doing first thing. See, all are different, okay? They will ask, again I am saying, they will ask specifically about existence. Existence means it is there or not, okay? What you will do first, confirm that company physically inspects all the non-current asset register each year. Confirm that the company physically inspects all items in the non-current assets. See, if it is remotely possible, is that it's very remotely possible. But what we are doing, I will add this, at least a sample of assets. Is it? You have in the register you have all the specification. That is the reason when you are doing the things you see in your office also. You see in your banks also, wherever is there. Every asset will have a asset number. Nowadays they are putting a sticker, barcode sticker will be there. The moment you purchase an asset, is it right? You purchase an asset, any asset, projector, table, furniture, laptop, printers, anything. Immediately they will generate a number. They will put that number on the asset. That number and the register number, that number is generated from where? That number is generated from the current non-current assets register. And for those sample of assets, is it right? Sample of assets. I'm adding this from my side. From the sample of assets, you have to physically inspect that all the items, what is there in the non-current asset register, that exist or not. Second point, inspect assets. Which assets? We cannot, I told you, we cannot do anything, all the assets. Inspect assets. Is it right? Concentrating on high value items. And high value items, is it right? Where we have to focus? We have to focus on high value items. We have to focus on any additions it has been. Is that inspect assets, concentrating on high value items. We will say high value items, fine. Now, when you are inspecting high value items and additions, confirm that items inspected physically exist, or are in use and in good condition, and have the, see, I told you, have a correct serial number. This is a nothing but an asset number, okay? Asset unique number. Is it an asset unique number? Every asset will be given a unique number. Is it right? Every asset is given a unique number. In the previous days, they used to write. Okay, now they have a barcode reader. You go tomorrow and you physically see the things. You will come across somewhere. If you talk about the furniture, tables, at the underneath of that top, you will find somewhere, you will find the sticker. Is it? That is the serial number. What we are inspecting, say, find existence. If the asset exists, then what you have to do? You have to first you should confirm that it has been there. Existing is not. Once you are getting confirmation, then you will inspect the asset. Which assets? High value assets. Anything additions or not. Whether they are in good conditions or not. They have the correct serial number or not. Is that we are inspecting. Now, third one is that these are the things, okay? Review records of income yielding assets. The assets which are generating income. Is it? The assets which are generating income, buildings, plant and equipment. Is that all PPE, plant, property, plant and equipment? Is that if it is giving the income, then you have to review the records. And in the end, what we are doing, we are making a reconciliation. And opening and closing vehicle by numbers as well as by numbers as well as the amount. First, confirming the company physical inspects all the items. Second, we are inspecting the assets, high value and additions. Is it? Whether it is in good conditions and will have the serial number. Third, you will review the high yielding assets. Is it? Property, plant and equipment is high yielding assets. Is it? High value assets, high yielding assets. In terms of which are sensitive assets. And in the end, we will reconcile opening and closing balances. Are you clear about this?
Yeah.
Now valuation, okay? Valuation. When you are talking about the valuation, is it right? When you are talking about the valuation, high valued goods, okay? High valued goods. I will give an example of that. People who are doing business in gold. Is it business in gold? Huge value, okay? Huge value. Definitely they should get a valuation certificate by expert, okay? I'm not right, you should not write this, but I'm telling you, you will ask me who will give this valuation. It has to be given by the expert in that field, and it has to be authorized by the auditor. Is it? Whether the valuation certificate given by the expert, is it right? Whether the valuation certificate given by the expert is in accordance with the policy, company policy or not. We are only, what auditor is doing, auditor only verifying valuation certificate. Is it? Valuation. The first you will see. Is it? Second, reasonable of valuation. Is it? Whether it has been reviewed by the expert, who has valued it. Is it that who has valued it? Whether it has been the experienced person valued. What are the which assets has been valued? What is the scope? What are the specific assets? What are the methods? What are the assumptions used? Whether valuation are based in line with accounting standards. See what happens. The rule says IAS 16. Is right? The rule says IAS 16. The rule says IFRS 13. Fair value. Is it? There are two things comes into picture. One is IAS 16, one is IFRS. If you are doing a valuation, I told him maybe so many times, whenever you are doing valuation, you have to do valuation across all the assets. You said you should not be selective. One plant and machinery you are doing all plant and machineries. One land and building, your property, plant and equipment, you have to done all. Okay, it's not selective. And once you are doing the thing, that is one of the conditions. Once you are doing it, the valuation, then what we have to do? We have to replace. Okay, we have to replace net book value with the fair value. Okay, new value we have to take. We have to not take old value. Sometimes new value will be positive, sometimes new value will be less. Okay, sometimes new value, fair value will be more, sometimes whatever is happened, you have to take on the basis of fair value. These are accounting standards. Is it? Now, when you are doing the things, you have to calculate depreciation on fair value. You should not say that, yes, I am going to calculate depreciation on the old carrying amount. Okay, these are the things. Okay, these are the some selective things. Okay, 1, 2, 3. Okay, this why I have mentioned here. These are the accounting standards. Okay, as per IAS 16 and as per IFRS 13 in terms of fair value measurement. Is that in terms of fair value measurement? Fine. That is the reperform calculation. What is the revaluation surplus? The moment you are doing, is it? You are doing revaluation surplus. Again, revaluation surplus, is that revaluation surplus? You have the things. Why I will mention little bit. Okay, for your understanding only. Is that you have the IAS 16 is there. If there is a revaluation surplus is there, then where we have to show? We should not show in the profit and loss account. You have to, after profit for the year, in the profit and loss account only, you have to show in the other comprehensive income. In the profit and loss account only, after the profit for the year, is it? After the operating profit after, is it? You have to show in the other comprehensive income. Other comprehensive income, again, if it is a long term, it is in OCI. If it is in short term, it is in profit and loss account. There are some specific guidelines are there. Yeah, there are some specific guidelines. Any revaluation surplus, we have to show it where? We have to show it in the OCI and or we have to show it in the statement of changes in equity. Don't write all these things. That you will ask me, what is the reval? That's why I am saying. Third point. Fourth point, what? Confirm that whether valuation of a revalued has been updated regularly, yearly basis, full valuation every 5 years, and interim valuation year 3 generally. Is that there should be a policy. Okay, the first what policy says, I said that the policy is, a general policy is you have to, once you are starting revaluation, you have to revalue regularly. Now, so every company will have a specific value. Assume some policy says that we are revaluing, full revaluation will be 5 years. interim revaluation. Fine. If it is full revaluation 5 years, every 5 years you have to do full revaluation. Every 3 years you have to do interim review across all the assets. Is it right? By asking the finance director, inspecting we have to say what we have done now and what we have done previously. That yes, last 3 years before they have interim revaluation. Last 5 years ago there was a full revaluation. 2015 they have a full revaluation. 2020 they have a full revaluation. Likewise, why we are doing this? Only to make sure that they are consistent in policy. We have to verify, we have to confirm that the company is following the guidelines which has been set by themselves. This is the third point. Okay, this is the fourth point. What is the fifth point? Inspect draft accounts to check the client has recognized statement of profit and loss account, whether it has been profit and loss, revaluation losses. Is that again I'm talking about the things. Okay, now I understand slowly, steadily, consistently. Is it right? What will happen if revaluation is done? Okay, if revaluation is done, you will have a surplus. Then where we are going to show? You are going to show in statement of changes in equity in revaluation surplus. Fine. Is that now? If it is gain, now what will happen if there is a revaluation loss? Is it? If there is a revaluation loss, these are the things. Financial reporting specifically talks about this. Is it? Financial report. Now, if there is a revaluation loss, assume you have a revaluation surplus of how much? 100 is there. There is a loss of revaluation loss is 60. First, you have to deduct loss from the surplus. Already you have surplus of 100. First, you will deduct the loss from the 100. And what is the revaluation surplus? You will show revaluation surplus of 40. Again, another year, you got a revaluation loss of 50. You got a revaluation loss of 50. You got, how much revaluation surplus is there? 40. We cannot deduct 50 from 40. How much we will deduct? We are deducting 40 from the surplus. We are making revaluation surplus account 0. Done? Now, when there is a profit, we are going to show in OCI. When there is a gain, revaluation gain, we are going to show in OCI, other comprehensive income. When there is a loss, how much is the loss here? 10. How much is the loss here? 10. This loss we are going to show where? We are going to show in the profit and loss account. But what is the condition of that? First, you have to exhaust any revaluation surplus. Then, after revaluation exhaust, if still the loss exists, then it has to be shown in the profit and loss account. Once class is over, when we are having the thing, revise this point. Okay, revise this point. Why it is difficult for us is we have not done FR. If we have done a financial reporting, this point is very well explained there. Unless there is see that very clearly. Inspect draft account to check that client has recognized in the statement of profit and loss any revaluation losses. Unless there is a credit balance. Unless there is a credit balance in the statement of changes in equity. In which case it should be debited to equity to cancel the credit. All revaluations gain should be credited to equity. Means if there is anything is there, we have what we have to do? We have to debit. Okay, we have to debit to the statement of changes in equity. Which account? Specific account? Revaluation surplus only. Is it? Means if there is anything, means we should not mix up the things. Okay, we should not mix up the thing. Reevaluation. Actually, why reevaluation is sensitive? Because there is no movement of funds. Okay, you can otherwise what will happen? There is a scope of error. There is a scope of fraud. I can say. Is it? You are just a non-operating income to operating income, operating income to non-operating. Is it? This is very, 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 very important point. Understand with example. Okay? Understand with example. Review insurance policies in all categories of tangible assets, whether they have adequacy, insured values, and verify the expiry dates. Is it? They will say it is review insurance policy. Again, review insurance policies on the basis of a sample. What is the valuation? See, that is what it says. Is it that you see that your car, if you are taking your car for insurance renewal, what they will do? They will revalue the car. Okay, they will revalue the car as such. Okay, this is what it says. The first one is you are talking about the certificate, verify valuation to valuation certificate. Then you have to consider who has done the revaluation, experience, what scope, what are the methods and assumptions, reperform calculation of surplus. Fourth one, you have what is the policy, 5 years, 3 years, 1 year. You have to follow the policy, confirm the policy. Fourth one, you have to inspect the accounting aspect, checking whether it has been correctly accounted or not. And last one is you are talking in terms of insurance policy. It is little bit initially, I am telling you very clearly, initially it will be little bit, it will take time to grasp the concept. Is that it takes time to grasp the concept. The moment you are going forward, the clarity will increase. And again I am saying, you will have next 2, 3, 4 classes. We are talking only about substantive procedures. You will get mixed up. Okay, I will say very simple. You will get mixed up what you are doing. But slowly you can identify. You can identify what is the property, plant and equipment, non-current asset, what is the cash, what is the payroll. You will have a very clear system in our mind. Okay. Now, what is the rights and obligations? Is it right?
That's for the valuation certificate.
Tell me.
For the valuation certificate and the insurance policies which show the value, can we replace one with the other?
No.
Or we have to use both of them?
No.
Always?
Both done for different purposes. Both done for different purposes. Okay. Maybe they will use valuation certificate for insurance policies. Is it? Maybe they will use valuation certificate. If the value has been increased, they can say that yes, this value has been increased. You revise the insurance policy with a higher amount. But both are completely different. Valuation certificate is issued by the expert for a specific type of assets. Even for buildings, you will make a revaluation. Even for the land, you will make a revaluation. Is that the purpose of valuation certificate is different. Whereas insurance policy at the end of the year. Is it insurance policy at the end of the year? Whether what the purpose of insurance policy is that all the assets has been insured or not. Okay, never mix the things. Okay, never mix. Review insurance whether every asset has insured or not. That is the objective of this one. Okay, that is the basic purpose of this. Means you cannot say that valuation certificate is done for by the expert to know the exact value. But insurance policies is completely different. Insurance
Okay.
policies means you are making sure that every asset has insurance coverage or not.
Okay.
Never mix the things. I am telling you this. This is what I am having a doubt. Never mix. Separate. The more you separate, the more you get marks. The more you club, there is a chance of losing marks. Now, coming back, what are the rights? Ownership. Is it, as I said, cutoff is there. Cutoff is date. Rights and obligations, anywhere it is a ownership. Verify the title of the land, who owns the land, okay, by inspecting with the documents, okay. What are the documents you have? Registry certificate, lease agreements are there, okay. First, rights and obligation, verify the title of the land by inspecting the title deeds, registry, and that's a legal document, okay. Now, obtain a certificate from the solicitor or banker, purpose if it has been held in custody only. Obtain a certificate from the solicitor, that is a legal person or bankers, stating purpose for which deeds are being held. If it has been held by the bankers, stating deeds are free from mortgages or lien. Means we should make sure that the company has not, it is 100% owned. If there is any conditions, definitely what will happen, if you have taken the loan, you cannot sell it. Like a car, okay, like a car, you are buying a car. If you pay the complete cash, no, the title of the car will be on your name. If you have taken the car on the loan, what will happen? The mulkia will have both your name as well as the name of the bank which has given the loan. You cannot sell the car when still the loan is outstanding. Is that very clear? These are rights. Means whether you have the complete rights or not. Inspect documents for vehicles held. They are in the client name. See how much they are saying this. Is that you have to inspect that it has been in the client's name or not. Single name. Okay, single name. Is it, if you have taken, see this, we are not debating, we are not discussing that whether it has in two names. No, we are not concerned about that at all. We want to say that whether the assets are under the client name or not. If it is on the client name, you have the right and obligation. You have the complete right, okay? You have the complete right over the asset. Confirm all vehicles are used in the client business. You see the thing, you see the thing. You see the commercial vehicles. Is it? You see the commercial vehicles. When you see the commercial vehicles on the door, you will, what will happen? You will have the client name will be there. Client name will be there, client address will be there. When you are stopping while driving next time, is that, well, when driving next time at the signal, you automatically observe this. Is it right? They will have the client name. Means that belongs to the company, not to the individual. Those vehicles are being belong to the company as such. That is what it says. Confirm all vehicles are used for client business. Point number 5. Examine for the title of other assets. Now you see the things. When you are talking about, you are asking this. You are talking about, if you are talking about rights and obligations, you are including invoices. Is there any architect certificates, any contracts? Is there any architect cert, any contract, any hire purchase or any lease agreements? Rights. Now you are asking me the thing. Rights means, yes, you will check, you will verify what? You will examine the invoices. When you verify the invoices, when you are purchasing the thing, then the company name will be there on the invoice. If the company name is there on the invoice and you are examining the the assets, then we'll say that yes, it has been purchased under the name of the company, and they have the right. The company is owning this, the only on the basis of your invoices. Review evidence of charges in the statutory books and by company search. Is it statutory books or law? What happens? Fine, you have got it registered. Is it right? You have done statutory means legal books. Okay, you have done. What happens? Definitely, they will be what taxes will be there. You have paid taxes. You have paid any legal charges. Is it you have paid? You will review. Is it right? You review for evidence. Whether you want to know, make sure that the assets have been owned. Okay, the assets has been owned. You will pay VAT, value added tax. Then you will see what that is the statutory book. Is that value added tax? Whether tax has been paid or not, tax has been collected or not, tax has been filed or not. You will see all the things to make sure that yes, now if you are purchasing worth of 10,000 and you are paying tax of 5%, then you will say that yes, 5% has been shown as a VAT in the books. Then your confidence, your evidence will be more satisfactory, more reliable. Okay?
How can we use this for rights and obligations to verify rights and obligations?
With respect to statutory books?
Yeah, number 6.
How we are using? See the thing. When you are purchasing for, assume you are purchasing an asset of 10,000. Okay? On this you will pay, how much will come, how much on 10,000 into 5%, how much you are paying VAT is how much? You are paying VAT is 500. Is it right? VAT is 500. See the thing. Financial audit will be different, tax audit will be different. When you are doing a tax audit, definitely you are what will do? You are paying this, you will claim. You will claim 500. Okay, what have now? Financial audit you are showing 10,000. Okay, financial audit you are showing 10,000. Now you want to confirm that whether it is owned or not. Whether it is, see, you will not pay tax if it is not purchased under your name. It gives you another source of evidence that here what you will write. You will write that this is the VAT which has paid on the purchase of the equipment worth of 10,000. This VAT related to this amount. You have a multiple verification. The rights and obligation you will have more reliable. It is more relevant and it is more reliable.
Okay.
Okay, it is more reliable. Tomorrow you are doing tax audit. In your tax audit, definitely you will have a different perception. You will ask, you will question, what is this 500? Then you say that yes, I have purchased for 10,000 and this 500 is related to. If you want to claim that 500, okay, if you want to claim exempted claim, something is there, any claims are there, assume. What will do? You have to show this document also. You have to show that I have purchased it. That is the right. You have the right to claim the tax. Is it clear?
Yeah.
Yes, Gaeta and Laila, how are you?
Clear, sir.
Yes, Laila, where are you?
Clear.
Is it understanding? I'm very slow. I know it is very sensitive. Is it right? Very, very sensitive topic. Is it? Now, review leases of, if you have any taken on lease, okay? You review leases of leasehold properties to ensure that companies has fulfilled the convenience thereon, conditions thereon. Is that it is a operating lease, it is a financial lease, on what conditions we have made. Is that whether we are going to pay at the beginning of the year, at the end of the year premium, all the things, terms and conditions of the lease. Is it? Because we are showing it under the assets, okay? We are going to show it under the assets. which type of assets are owned assets and which type of assets are real. Now, at the end, examine invoices after year end, audits and board meeting minutes to for evidence of capital commitments in future. What happens? Is it right? What invoice? Examine invoice received after the year end. Whether, see, we are receiving after the year end, whether it is related to the previous year or it is related to the next year. Is it really, I will put it, it is related to the current year or it is related to the next year. Any invoices you have received. You have received any one invoice on 5th of January. Is it? You have received one invoice. Now, we have to review whether it has been related to the current year or it is related to the next year. Is it right? You should differentiate. And most
Copy of
important.
assertion, right?
Pardon?
The last point for copy of assertion, right?
Yeah. Is it? After the year end. Is that I will write. Is it? Fine. And any board meetings or minutes, whether the evidence for capital commitment. Fine. This is with respect to what? This is rights and obligations. Why we are referring board minutes? If it is a huge expenditure, definitely it will be up. It has to be get approved by the board of directors. Is it okay with you?
Yeah.
Now, substantive procedure for depreciation. Again, we are using now I can say that you will understand what is the substantive procedure. Substantive procedures is nothing but the simple way it is a multiple evidences. That's all. Nothing more, nothing less. It's only multiple evidences. What you are doing? What is the first one you will do? You will say what is the depreciation rates in applied to relation to lives. Okay. What we will say depreciation rate, straight line method, return down value 20%, 15%. We have done in accounting financial statements. We have done. They will mention what is the life of the asset. Is that? They will mention whether there is a residual value or not. Is it? They will say that yes, it has to be replaced at the end of 5 years, at the end of 3 years. Past experience of gains and losses on disposals. It's a very comprehensive one. Okay, I will divide this. I will divide this again into different sections, different points. We can write for this one. We can write almost 4 points. We can write on this. Okay, you will know. Is it what is the depreciation rates applied to asset lives? What are the residual values? What is the replacement policy of the company? Any similar assets has been sold in the past. Okay, and what are the experience with respect to gains and losses? If some assets has been sold, gains will come. In some assets, losses will. We are not going into that much detail. Consistency with the last year accounting policy. If we are working with a straight line method, we have to follow straight line method only. Consistency. If you are following return down value method, follow return down. Very clearly it has been stated when you are talking about land, when you are talking about buildings, when you are talking about property and equipment. Land, no depreciation, only appreciation. Buildings, you will have a straight line method. Property and equipment, you will have a return down value method. Is that proper? That's very clear. Okay, means you should be consistent. Okay. Now, any possible obsolescence, any outdated, any expiry dates are there. We have to think. Review non-current asset registered that depreciation has been charged on all assets with a limited useful life. Now I am giving you a real example. Why we don't charge depreciation on land? Land has a infinite life. Land has an infinite life, is that we have to calculate depreciation only on the limited useful life. Buildings, there is a life 10 years, 15 years, 40 years, 30 years. Plant and equipment, they have a life 5 years, 10 years. Land is a infinite life. This is one of the logical reason why we don't calculate depreciation on land. We have to calculate depreciation only on those assets will have a limited useful life. Somewhere they will ask you these questions, okay? If there is they will ask you, okay? Not in ACCA exam, but some way other. If somebody will ask you in interviews, they can ask you in interviews also. Okay? For revalued assets, ensure that the charge of depreciation is based on the revalued. Whenever we are making a revaluation, the depreciation should be charged on the revaluation. I just told you, this is the condition of IFRS 13. Okay? For a sample of reperform recalculation of depreciation just for note of proof in total to ensure that it is correct and it appears reasonable. Reperform the calculation. Compare ratios of depreciation to non-current assets. What is the percentage of non-current by category? And what we are doing, we always compare what we have done previous year. Means what it shows if it has previous year and current year. Whether if the assets are increasing, depreciation amount will also increase. If the assets are decreasing, depreciation amount will also decreases. Scrutinize draft accounts to ensure that depreciation policy and rates are disclosed adequately. Is that you have to scrutinize the draft accounts, whether the depreciation policy and rates are mentioned on notes to the accounts. For a sample of fully depreciated assets, inspect non-current assets register to ensure that no depreciation has been charged. For a sample of fully depreciated assets, keep it in mind. For a sample, they say that the cost is 10,000. The life is going to be 5 years. And you have charged depreciation for full 5 years. 5 years are completed. Still the asset is in use. Still the asset is in use. Assume, okay, till the asset is in use. Again, once you have done for 5 years, again we should not calculate depreciation. If you wish to calculate, first you have to revise the life. Revise the life of the asset, then only you can calculate depreciation. Otherwise, what will happen if you are calculating depreciation and already the asset life is over, means unnecessary we are decreasing the profits. By calculating the depreciation, what will happen? Your profits will get decreased. Yeah, your profits will get decreased. Revise this again, okay? So what are the substantive procedures for depreciation? What are the substantive procedures for additions? Okay, now I can go a little bit specific. Okay, verify additions. Is it in terms of architects? Where we are using architect certificates if there are any construction. Is there any construction activity is there? Is there any new buildings have been constructed? Okay, is it right? Any new buildings have been constructed, you will have an architect certificate. Solicitor completion statements, is it right? Legally, is it right? You will come across, municipality will give you a completion certificate. Is it legally you will get one completion certificate. You will have any supplier's invoices. Is it supplier invoices or any other relevant documentation? Is it if it is this applies specifically to where this applies to the construction activities, any new buildings. Fine. Most important thing, capitalization of expenditure. Is that we have mentioned whether it is a capital expenditure or whether it is a revenue. You should not mix capital with revenue. Is it? You should not mix with capital. When you are making an addition, it has to be very clearly review capitalization, examining non-current assets additions and with relevant expense. If it is expenses, it has to be in profit and loss account in terms of repairs, motor expenses, and to ensure that capital and revenue distinction is currently drawn. This is important point. When I say important point, it has been asked in previous scenario. They will ask. Okay, in the scenario they will mention this. Okay, in the scenario they will mention this about whether we have to make sure that whether it has been capped, if it is a capital expenditure, capital revenue expenditure, profit and loss account. Is that it drawn in comparison is in line accordance with consistently applied as per the company's policy. Very important, capital expenditure and revenue expenses. People will do this, okay? People will most of the time, they will mix it up, okay? They will mix it up. So, you have to be very specific on that. Second one, inspect non-current assets account for a sample of purchases to ensure that they have been properly allocated. Yeah, for sample of non-current assets, is that properly allocated? Again, properly allocated in non-current assets, in current assets. Is if it is identified as a capitalized one, we have to mention that it has to be accounted in non-current assets, property, plant and equipment only. Ensure claims for any grants. Okay, ensure claim for any. What does it mean? Any idea?
It is received from the government.
Yes, it is received from the government. Okay, it is received from the government. Fine. Is it received from the government? I will see. It is not related to you, but I am writing this IAS 20. Is it? IAS 20 talks about what? Accounting for government grants. Is it? Government grant. Little bit. We are not writing this. I am giving you any grants we have received. There is a capital grant, there is a revenue grant, so many things are there. Okay, we are not forget about special economic zones. Government will give you grants. Is it right? Ensured appropriate claims has been made for grant. Grant received and grant receivable has been received by inspecting documents and bank statements. If you are having any claim on government grants, we have to verify, ensure that it has been done, it has been accounted. Okay, how much is receivable, how much is received. Okay, we have to make a distinction. Verify that additions has been recorded, scrutinizing the non-current assets. Now at this stage you will get some what is the non-current asset. Register with the general ledger. Is it? With respect to additions, okay, verify that additions has been recorded by scrutinizing the non-current asset register and general. If both are matching, definitely. If you have added there, then only you can add in the ledger. Is it clear to you?
Yeah.
Fine? Yes. Gaita and Laila. Okay? Little bit dry. It is not little bit dry. I am telling you very simple. Okay, but it's very important. 20 marks. This is the lifeline. Is it that this is the lifeline? 20 marks. This is the area students will lose marks mostly if you see the examiner's feedback. Is it? And this has to be and this is not difficult. Only thing is you should know what is the valuation. Fine? What is the now self-constructed assets, buildings. You have constructed buildings. Okay? You have verify what you are doing. Verify material, labor cost and overheads to the invoices, whether you have purchased or not. Okay? Whether the client has purchased or not. Ensure expenditure has been analyzed correctly. Is that whether it is a capital expenditure or revenue expenditure? Is that by inspecting a sample of invoices? See, ensure has been analyzed correctly and properly charged to capital by inspecting a sample of invoice. Self-constructed is that before operations and after operation. Before operations, capitalized. After operation, it is revenue expenses. Okay? Before operation, it is a expenditure. And after operation, it is a expenses. Review cost to ensure that no profit element has been included. What we are doing? We are taking only the cost. Okay? We are only taking only the cost. Is that self-constructed? Okay, self-constructed means you are constructing a house. Okay, when you are constructing the house, you will take only the cost. There is no profit element. Review accounts to ensure that finance cost, interest. Is it right? Interest, finance cost. Is it right? Here again, IS 23, borrowing cost. You will come across all these things in SBR, okay? Strategic Business Reporting, you will come across. The only thing is, we have not done this in financial reporting, we have not done. That is the reason we find all these things new. Is it? But simple. Review accounts to ensure that has been capitalized or not capitalized on consistent. Again, there is a policy. I am not going to go in that much detail, but again, there is a policy with IS 23. When it has to be capitalized, when it has not to be consistent. Cost capitalized in period do not exceed the total finance cost for the period. Means it should not be more than the interest expenses. Okay, it should not be more than the interest. You are saying interest expenses are going to 100. Cost you are going to have 110, it cannot be like that. Is it right? This is what we are talking about, self-constructed assets. Again I am saying, when you are talking about self-constructed, hardly, I am telling you this also, hardly I came across this type of question in my previous teaching experience. But for our better understanding, you cannot ignore also. Fine? Can we cover this and can we stop this? It is little bit more dry, okay? It is you need time, okay? We will cover this and we'll stop. When we'll coming back we will see the thing. They have given in 2010, 12, 13. Is it right? They have done 16. Somewhere it is there. Okay. They are talking about the things. Fine. One. This is what it. See the things. They are talking about the substantive procedures. Fine. We'll see what is there at the later stage. That's not important now. Is that the last one? What is the disposals? Okay. What are the things we have done from the beginning? If you take from the beginning, if you take what are the different types of assertions we have taken? First, we have taken the completeness. Okay. First, completeness. Second, existence. Is that? Write down on separate page. Okay. Write down on separate page. This much you write down. Is that right? First, non-current assets. Completeness, existence, valuation, rights and obligations. Is that depreciation? You don't say that. You will ask me. Okay. I know. You will say it is 7 and it is 9. Okay. You will say where is 8? I have not done 8. I have taken the 8 and I have put in one slide. Okay. I have put it in one slide. That is the reason 8 is missing. Fine. Next, you have talking about additions and self-constructed assets, and most importantly, disposals. When you are disposing of, okay, what is the evidences we have to work it out. Verify disposals with supporting documents. Checking transfer of title. Is that you are selling your car? Simple, think about this. You are purchasing a second used car or you are selling a used car. Is it right? You are disposal. Is it right? You are talking about the supporting transfer of title, sales price and date of completion of payment. Definitely payment has to be transferred. Only title should not be transferred. Now you should get the value also. What they say, recalculate profit and loss on disposal. You have to, the auditor has to recalculate and it has been correctly reflected in financial statement. This is little bit easy, okay, not easy because we have done so many things, we find it easy. Considers whether proceeds are reasonable or not, okay, means that is, it is fairly valued or not. If the asset was used as security, ensure release from the security has been correctly made by inspection of document. See, sometimes what will happen, you have purchased I'm giving a car, I'm giving a house as a example. Okay, you are taking a car, you are buying a car on loan. Then what will happen? This you can sell it this, but what happens? The bank has to get informed, the bank has to get updated, the loan has to be transferred to that person name. Is that the loan has to be transferred to that person name? Then only what will happen, the transactions will be complete. That's what it is. If the asset was used as security, for any cover up, ensure release from security has been correctly made by inspection of document. The documentation work has to be completed. Any review board meetings to confirm that disposals were authorized and bona fide. See the thing, if you are selling any asset, specifically a strategic asset, is it right? A high value asset. A strategic asset or high value asset. I can say if that is the case, you have to get even when there is additions, you have to get the approval of the board. Even there is a disposal, you have to get the approval of the board. Is that you have to get the approval of the board. Fine. These are the substantive procedures for the non-current assets. Okay, there is the substantive procedures for non-current assets. Is that what they have mentioned? They have mentioned it here. Questions are likely to come up in the scenario section B. You want to file the audit procedures. Is that they have asked the section B. Okay, I told you in this also. Now what they say, we will cover this and we will, yes, okay, we will leave the last slide. Okay, now evidence in the form of substance has been tested in every sitting. Yeah, current FAD. Therefore, it must be most important that you first understand the difference. See the difference between a substantive procedure and test of controls. And secondly, the financial statement assertion, how it is tested. When you suggest audit procedure, be they substantive procedures or test of controls. There is lot of, they are stressing again and again. Okay, I will tell you, the moment we will practice, it will be more clear for us. Is that it is vital, very important that sufficiently detailed, otherwise you will not score full marks. Detail means don't mix it up. Detail means 2 sentences is detail. Understand point? My way of explanation is 2 sentences is detail. 1 sentence explanation, 1 sentence description. Identify and describe. For example, discuss with the management, check for existence are too vague. Here to have complete the audit of an account, which of these? As a general use, when asked for audit procedure, do not use the word check. Usually avoid check. Make it a point. Okay, we are not checking, we are verifying, reconfirm, we are confirming, recalculating. We are not checking. Is it right? We are not checking that. The verifying is different. Checking. Verify means source document. Verifying means evidence. Auditor will verify with evidence. Auditor will never check. You must use action word. Now I am telling, this is from examination point of view. You have to inspect, you have to discuss, you have to observe, you have to recalculate. Remember the methods which auditor used to get audit evidence, which are discussed in chapter. Generally, you should assume 1 mark for well explained procedure. Questions on audit, risk and responses may require you to apply the knowledge you have gained from this chapter. Questions on audit, risk and responses may require you to apply the knowledge. Okay, means now when you are doing the things, you will not have one specific concept. You will have the things which I have done in the previous chapters also. Is it clear to you?
Yeah.
Fine?
Yes, sir.
Okay. Now, can we stop here?
Yeah.